Okay, everybody, it's me, Gregory Mannarino. It is Monday, October 17, 2022. You know what that means? Do you know what that means? Well, it's time for us to get back to work, people. And as you all know, this freak show continues to get freakier. Now, I want to cover a few things with you this morning. No shock to you at all. But of course, this all has taken the economists by surprise. What am I talking about? All right, here we go. U.S. factory activity now weakens even more. As incredible as that may sound, we now have 3 consecutive months of nothing, negative growth. How could you have negative growth? Can you explain that to me? Because that's what they're talking about, negative growth. It's negative or it's positive. It's not growing if we're negative, right? Make it up. Okay, so yes. But again, is this a surprise to you if you've been following this blog? No. There's no end in sight here, okay? And not only is there no end in sight here with contracting factory activity, manufacturing falling off of a cliff. Now, this is a global phenomenon, people. You know that. And this is central banks. What are they doing? They're killing demand. What else did we find out this morning? Retail sales continue to weaken. The consumer is maxed out. They're dying. In real terms, or however you want to conjure this up, they're being eliminated. They're being freaking eliminated. But what else would you expect here? And it makes me laugh. I'm flipping through the financial channels this morning, Bloomberg, Fox Business, CNBC, and they're talking about the ECB, the Federal Reserve. Oh, they can't give up their inflation fight. They can't give it up too early. They're fighting nothing to deliberately crushing the economy. You know that. So what are they saying here? Okay, central banks are going to continue to raise rates, which they are going to. Believe me, this phenomenon is not going to stop for as far as the eye can see. So forget about a pivot or anything like that. They're going to be raising rates in a deliberate attempt to crush the economy, crush demand. I mean, imagine that just for a moment. You're hearing about all these, recession fears. Are we going into recession? You think so? Meanwhile, the Fed is deliberately, along with central banks around the world, crushing demand, crushing the economy. Henceforth, why? You got factory activity falling off a cliff, manufacturing falling off a cliff. Let me ask you while we're on that topic. Why is it that nobody from one of the mainstream propaganda ministries is going to explain that to you? All they're going to tell you is, the Fed and ECB and these other central banks, they're really in there. They're really in there. They're trying to fight inflation. You can't make it up, people. But that's the situation that we're in. It's absolutely incredible. So factory activity decreasing for 3 consecutive months. Negative growth. I love the way they word these things. It's either negative or it's positive, okay? Since it's negative, it's contracting. Can I please get a duh? Thank you very much. I mean, you can't, like I said, it's impossible to make this stuff up. Also, like I said, so the U.S. economy is 70% based on retail sales. Now, retail sales continue to crater with no end in sight. Why? Consumers are done. They're maxed out. They can't get by here with inflation surging out of control and real wages, that is what people are earning based against the surging inflation issue, is getting progressively worse. So what would people expect here? This is what makes me freak out. I sit there and I flip through the propaganda ministry, and they're trying to push this narrative here, people are doing good, and they parade this guest out and that guest out to try to convince you, again, that what you're seeing is not real, and the pain that you're feeling here, that's not real either, because everybody's rich. We're all doing great. But I'll tell you what's even funnier about that. So on top of this abysmal economic news, which won't stop, just imagine it's going to get worse, because it is. We have stock futures higher across the board, like 300 points higher on the Dow Jones Industrial Average here. But what's driving that? Well, how about an 8 basis point drop in the 10-year yield? Yes, 10-year yield has come down. The dollar, or the relative strength of the dollar, has also dropped crude oil getting a bit higher. So the drivers this morning, of course, is not the economic news. It doesn't matter what happens to the economy, which is in free fall, and it has nowhere to go except worse, to fall faster. There's just no doubt about that. I think it's pretty obvious here. But again, doesn't matter to the market. Stock futures pointing towards a higher open. Trading doesn't start for about 36 minutes from the time I'm doing this. Okay. Because again, 10-year yield lower, relative strength of the dollar lower. You see how this is working? You've been seeing this in real time for so long now. And I love that. I love being able to demonstrate these things to you in real time so you can see that. So, look, a lot of this, the market is kind of holding its breath right now. Why? Because we understand this issue with the U.S. Treasury here, this backdoor quantitative easing. Is it going to happen? I really believe it is. Okay, Janet Yellen going to the banks. Banks, do you think maybe the Treasury should buy a little debt? What do you think? Are you kidding me? So the market is maybe going to try to price that in. Look, let me say this. If they float out the Yellen thing, the creature Yellen again, they float out that whatever it is out there, and she's pushing this narrative further, the market's going to love it. And if it happens, the market's going to really, really love it here. So let's just see where that whole thing goes. So let's throw a couple of more little tidbits in here. Okay. Silver up markedly higher this morning. Gold is higher. Cryptocurrency is hovering about the same. Look, we've been stuck in a range with regard to cryptos for a very long time here. You know my take on these things, people. I believe sincerely, and you're entitled to your opinion, with regard to gold and silver, let's just talk about those real quick. And how about we talk about gold, silver, and commodities in general? We are going to be entering some kind of a super cycle at one point beyond anyone's wildest dreams with regard to commodities, including obviously gold and silver. Look, they can push off this meltdown in the debt market, which seems like indefinitely. It's just another scheme to inflate the debt here. I believe, as I just said, that the Treasury is more than likely going to get in here and start buying bonds. Okay. So that's just a lovely situation for the market, but it's terrible for inflation. Again, you can't have your cake and eat it too. But the people are not being allowed to know that by central banks doing what they are doing, it's all massively inflationary and continuing to balloon the money supply. The money supply is the real problem here. Okay, but they're trying to convince everyone that it's rates. It's not rates. You know that since day one. We knew, you and I, okay, we've been so far ahead of the curve on this. It wouldn't work. Let the central banks raise rates all they want. It's not going to make any damn difference, and it hasn't. But again, you get the propaganda ministry saying, oh, they're fighting. They're fighting nothing, okay? They're crushing demand, crushing the economy, crushing the consumer, and it's all by design, and you know that. So, with that said, let's just listen. Let's listen. Let's cut through the bullshit, nonsense, dog shit, cat shit, whatever, bird shit, okay? Let's see what they're going to do next. There's going to be a few things that are going to happen. They're going to find another reason to borrow more cash into existence, whether it's a nuclear crisis or some other crisis must come along here. You have to understand, and it's going to be pretty soon. Some other thing must be thrown upon us besides the expanding war. Okay, we're spending hundreds of billions. We're sending more cash over to support a war that you and I never voted for. Okay, fine. Okay, that mechanism is already in place. There's going to be something else. They need something else, another mechanism to pull cash into the now, which is obviously inflationary. This will inflate the money supply. Central banks are hell-bent on it. They're not going to stop inflating the money supply. Again, could they stop inflation? Absolutely. They could stop it today. The central banks, the Federal Reserve, all they got to do is tell the banks to increase their capital reserve requirements, contract the money supply, inflation goes away, but you'll never hear that from mainstream media outlet. Never. Do yourself and me a favor. Well, if you just happen to have the gross displeasure of following, CNBC, Bloomberg, Fox Business, and they're talking about the inflation fight, central banks, just call them up and say, hey, listen, why do you think, sir, why is it that central banks are not really attacking the issue with inflation by contracting the money supply? Do you want to explain that? Because they're the person on the other end of the phone. They're going to wet themselves. They're going to have no idea what to do. They're just, look, it's propaganda. It's look here, don't look here. It's always the same thing. That's why they're pushing this narrative so hard here about raising rates. It's the distraction mechanism that exists constantly. Look here. Look over here. It's rates. Rates are the problem. No, rates are not the problem. It's the money supply. But you're not supposed to know that. All right, people, look, ponder these things. Let me see. What else did I miss anything here? I don't think so. Anyway, that's the story this morning. Keep your eyes on these dynamics here, people. 10-year yield, relative strength of the dollar. Better yet, I put it all together for you in a neat little package called the MMRI, Mannarino Market Risk Indicator. It's free to you and everybody else who wants to take advantage of it. Link in the description of this video. All right, now with that said, people, I am so out of here. I will see all of you later at the end of the day, and, I'm looking forward to it. I'll see you later.